Bitcoin is going to trade more like risk-off asset treasuries and gold. But the signs are it's not. It's still actually doing the opposite until I start seeing signs of that. Again, this morning, again, it might take a while. And that's why I'm worried it's going to have to get really low and cheap before it starts doing that. And everything, I think it's going to have to get low and cheap before people realize, okay, this asset, which is unstoppable, unlimited demand and unlimited demand, increasing and decreasing supply, it's gonna at least show those signs of strength. Show me the beef first.
A senior macro strategist at Bloomberg Intelligence, Mike McGlone, warns about Bitcoin's recent behavior, which seems to align more with risk on assets. Bitcoin stands at the edge of a bearish breakdown, with a small possibility that the $25,000 support level could hold. On September 11th, Bitcoin broke from its parallel range between $25,500 and $26,500, falling to an intraday low at $24,950. McGlone mentioned that Bitcoin is close to a point where, if it ends at that level, it would be the lowest since June. The Federal Reserve is weighing whether to keep raising interest rates steady in its effort to get inflation back to 2%. On last Wednesday, the U.S. government will offer the latest monthly update on prices consumers are paying across the economy, and the forecast is they were 3.6% higher in August than a year earlier. McGlone noted that when the Federal Reserve lowered rates in 2007, just before the financial crisis, the CPI had reached 5.6%. However, this time, the CPI is much lower, nearly half that figure, yet rate cuts are being considered. The Fed has already hiked its main interest rate to the highest level in more than 2 decades, and it has said it will make upcoming moves based on how inflation and other parts of the economy perform. Data from China on last Thursday showing falling exports fanned more fears about a slowdown in the world's second biggest economy, which has struggled with its post-COVID recovery. The August Purchasing Managers Index for the Eurozone has fallen to its lowest level in 3 years. Interest rates are still rising in Europe. McGlone explained that while some are getting optimistic about parts of the market in this situation, he is still being careful. Let's direct our attention towards the few clips from interview.
So I look at this as the key thing in the macro is this is all, what's the best leading indicator on the planet? What's it doing again on this Monday morning? Bitcoin is right near, if you close here, where it was this morning, it's going to be the lowest since June. And I completely believe that I'm probably going to write about it, partly because there's still disputes, but there's no other asset I've ever seen that doesn't close down and trades all the time. And it's the best performer ever during a most historic event ever when we had zero interest rates. So I like to tilt over to, I'm getting a lot of people pushing back in my call for crude oil. I'm still very bearish crude oil. I like to point out, well, here's a good bear market. The average price this year is the same as 2007. Like, okay, well, why should I be excited about that? So here's a good bull market. The average price for gold is the highest ever. Well, okay, well, I guess I can get excited about that. Give me a reason for that to change. So in the macro, I see what's happening here is epic historic. I mean, we all know that, and I'm looking at this. Look at it for 10 years from now. What's happening is just look at CPI is going to be the story this week. It's going to come out around 3.6 or so. It's right 3.2. Core is going to be 4%. Means the Fed can't cut because it's their rate, their target's 2%. But if you look back the last time they started cutting during the in 2007, right before the financial crisis, CPI peaked at 5.6%. It's much lower. It's almost half that now at running 3%. Yet they started cutting rates. Why? Because, as Dave mentioned, there was a credit event kicking in. This, to me, is going to be the biggest credit event of our lives, and it's just getting started. And the bottom line is the Fed is still hiking. So I look at people saying they're getting bullish copper. I'm like, okay, well, good luck. Fed's still hiking. China is still tilting over, and there's a major shift there. And then you look in the macro, okay, that's a problem because they mess with their best customers. They have complete lack of confidence internally, and for good reason. And then you look over at Europe. What's the entire continent of Europe? The PMIs are all negative, below 50, and they're still hiking rates. So this is what you'd expect, I think, in the tail end, the biggest liquidity pump in history that's still dumping, and this is early days. So yes, I've been early, but a few months from now, this should get ugly. And if it does,
Yeah.
I hope, and I'll end with this. Dave and I started this bet, right? And that is that I think it was steak dinner, that what gets first, 42,000.
I'll buy either way, by the way, if you guys just
Okay.
invite me.
It's one of those things. I hope I lose. I don't have a vested interest in this. I have a vested interest in overall being right in the long term, not being an idiot and losing my job and coming on your show and act like I know stuff. That's my vested interest. It's true. I mean, I'm not going to deny it. But so that's a bet. I hope I lose. But I can see crude oil doing it, going back to it was before COVID, around $40. I can see S&P 500 going back to around 3,000. Yes, those are far away from now. But in a normal recession, with the Fed still tightening, it's never happened. Okay, what's probably going to happen? And what's the fastest horse in the race? Why shouldn't Bitcoin do the same? So yes, I know the macro. So one thing also is the most widely known, assumed, accepted trade in the history I've ever seen of markets is, yes, it's bullish for Bitcoin when all these ETFs launch. And then I always go back to Benjamin Disraeli. What we anticipate seldom happens.
In 2021, interest rates were close to zero in the US and the UK, and slightly negative in the Eurozone and Japan. They were expected to remain low indefinitely. McGlone tells his 60,000 followers on the social media platform X that crypto's rise to prominence in a time of zero interest rates could spell trouble for the nascent industry as loose monetary policies rapidly reverse. U.S. Treasury yields rose Wednesday as fears over more Federal Reserve rate hikes led investors to sell short-duration U.S. debt. The two-year Treasury yield climbed 6 basis points to trade at 5.027%. McGlone highlights that the two-year note yield in the United States is presently 2.5 times greater than the combined average of China, Japan, and Germany, the top three countries. Let's direct our attention towards the few clips from interview.
I'm bearish all risk assets. I mean, literally all of them, because of what's happened historically. I'm saying 10 years from now, if hopefully I'm alive, or 100 years from now, how are we going to view this period in history? And that is, most people who've been trading Bitcoin and cryptos for 10 years don't realize how historic it was. Zero interest rates, negative interest rates in Europe, still in Japan. I mean, it's global, and that's changed, flip of the dime, particularly leading in the largest countries. So I want to start with this, 2.5x. I'll give you that statistic. That is the two-year note yield in U.S., how much it is higher than the average of the weighted average of the top three other countries combined: China, Japan, and Germany. Now, I said weighted because Japan's a bit distortion because it's so low, but if you take Japan, China, and Germany, their total GDP is about the same as US. Yet our rates are 2.5 times higher. That is an accident that's breaking already. And you're going to see every day that goes by, you're going to see scrambling to do something about it. Like we saw this morning, China's trying to do something, Japan's trying to do something to help support their currencies. It's the force is overwhelming. It's not going, you can't do anything about it. To me, that's what's breaking in the short term. So the key thing is you got to get the monkey, the 800-pound gorilla off the back of all risk assets, and that's the Fed. And I just look at baby steps at a time until you at least see the first sign that they're not going to hike at the next meeting. They might start cutting. And if they cut the first time they do cut, which is not going to happen,
that's the crash.
It takes 2 years. So this is how different and how unusual this is. So if this doesn't happen the way I think it's going to, I'm so happy to have to write those textbooks and I'll look like, yeah, I was completely wrong, all those lessons. But this is where we rope in the minor things, like this morning, you look at Ethereum down almost 2%. Well, that's just the day. You look at compared to Friday, they're down lower because we only have one day here. But that's where the macro is so overwhelming and so significant. And that's one thing I do enjoy when people say, I've been doing this for 20 years. Like, you have to have been doing it at least for 30 or 40 years and have experienced bear markets, because 20 years means 2003. That was the best time ever to buy, because what happened was in the back of a very bad bear market that collapsed, massive liquidity, and boom, it's time to buy. And then we had the crisis during 2007, 8, 9, massive liquidity. I just keep looking at markets rolling over, still rolling over, and the Fed's still hiking. That's not that complicated. Turn off CNBC, two-year notes at 5%. Thank you very much. See you in 2 years.
Yeah, I'm looking at the
Bitcoin is currently at a critical crossroads, with a pivotal support level resting at $24,995. If this level is breached, it could signify a negative trend shift, potentially pushing Bitcoin price to $24,000 or even $21,915. The current market conditions are characterized by low liquidity and low trading volumes. Long-term holders could start to accumulate as bullish hype cools down. This concludes our discussion for today. We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up and don't forget to subscribe to our channel to stay informed on the latest news and videos. Thanks for joining us.